Welcome back to International Finance. I am Andy Kim, Dr. Finance, and today here we're going to cover chapter 1 of Eun and Resnick and Chuluun, version 9th edition. And the chapter 1, it's an orientation. I already gave you why you should learn international finance in the previous lecture, but that was my personal take. Here it's more official take from the perspective of the textbook author. And then I go a little bit more into historical perspective to make it more fun, depending on the definition of fun, I guess. But so that you will have more, it's going back to 3,000 years or something. How people have been trading with each other, east and west of the continent, like that. And naturally the wave of this globalization kind of things. I'm going to talk about it and where do we stand, especially this pandemic, right? And before pandemic we had some Brexit and all this kind of Trump kind of phenomena, which is anti-globalization. Why did it happen and where are we going, right? That kind of things we're going to talk about a bit more here. So if you expect something really, really close to this textbook only, see you in the next chapter. But this is what I do. Okay, chapter outline. What's special about international finance? Goals for international financial management and globalization in the world economy and multinational corporations and summary and things like that. Now, what's special about international finance? FX, foreign exchange. This is a risk, and then the political risk that we have to cover, okay, in this international finance. A lot more fun, right? International politics gets in there, and then the market imperfection is another issue that we have to talk about, right? In what aspect is it imperfect? Incomplete information and all these kind of things. You don't know as much as domestic market in that market setting itself is incomplete in many cases. Expanded opportunity sets, of course. Widen the scope of your market itself. You're going to have more opportunities and more risk involved in it. So let's go one by one. What's special about international finance? Foreign exchange, I told you. This is risk that foreign currency profits may evaporate in local currency terms due to unanticipated, unfavorable exchange rate movement. Suppose, right, $1 is equal to 100 yen. You buy 10 shares of Toyota Motors at 10,000 yen per share, okay? And it cost what? 1,000 US dollars. Right? And then you sell the shares, the investment is worth 10% more in terms of yen currency. Good. It's like 110,000 yen. Arigatou gozaimashita. But you are American, you want to convert it back to US dollars. Then you have one more question. What's the FX rate? After converting it back to US dollars, are you still making profits or you essentially lost money? But then, if the yen has depreciated to $100 and 120 yen per dollar, then what? You lost money. Your investment has actually lost money in US dollar terms. So you see the calculation, US dollar cost of shares, right? That's $1,000 because 100,000 yen, okay, times $1 divided by 100 yens, right? That's FX rate representation between US dollars and Japanese yen, 100 yen unit, right? So if you do the math, it's 1,000. But at the end of the period, how much in US dollar terms? $916.67 only, because 110 yen, 1,000 yen times or divided by bigger denominator now, 120 yens per dollar. Gee, I lost money. Well, I told you about my sister's story about Tesla investment, right? Last year, she seemed to make money a lot when it comes to US dollar return, right? 서학개미 ambitiously. But after she converted those returns, right, reflecting those new FX rate, US dollar into Korean won, not as much, okay? Not much, okay? Because Korean won was appreciating more than US dollars, right? Anyway, so Exhibit 1 in the textbook shows you the monthly percentage change in Japanese yen to US dollar exchange rate, okay? What do you see? Well, it's fluctuating a lot. You would say, but like an earthquake somehow. But actually, that's not all. If you look at the earlier period of 1960 to 70s, right? Essentially during the 1960s, virtually there's no movement, okay? Virtually. And since 1972 or something, that's when I was born, right? The Japanese yen started to fluctuate like crazy, this FX rate, okay? And you see something more. Some periods are more silent, not as much moving. Some other periods are much more volatile, like fluctuating like crazy, okay? Different regime, different volatility seem to be governing, okay? Time varying variance, volatility seem to be there, right? Garch model, you could say. Yeah, you're right. Anyway, so FX risk is non-trivial, okay? That's the whole message. What's special about international finance? Political risk is here. And in terms of when it comes to political risk, be our guest. Be our guest. Be our guest. We have North Korea over there. We have, all kinds of conflict coming on. Who is more crazy than Kim Jong-un? That's the thing. And for exchange students, you guys are very courageous. You are more risk taker. You are more ambitious to take risk, so that you must have, you must have made a bold decision to come to this dangerous country, despite Kim Jong-un, the crazy guys over there in the north, 50 kilometers away from my place over here, right? We are at that gunpoint. You're still here. Your parents must have said, don't go to South Korea. But you win. Okay? You won. Great. You have bright future. That single factor tells a lot about it. Okay? You're a risk taker. Great. But the thing is, actually, the North Korea has been crazy like that over the last, 70 years. So it's our daily lives, right? They shoot the missile. Well, who cares? We live with that. Only for foreigners, right? It may be spooky, but it's not spooky at all to me, right? They're going crazy. Korea has been crazy. So that's another part of political risk. Anyway, then the next part of political risk may be your public health issues as well. That's what we've been experiencing since last year. Unprecedented pandemic. Holy cow, right? International politics gets involved in so much of a, up close and personal level, right? Wearing those masks, and then nowadays you cannot go outside, as much. And then public health issues internationally, affecting each other, giving and taking, and then this infections map, right? Or the graph tells you about the spreading of this pandemic for different countries and different levels and different dynamics govern over there, okay? Depending on where you are, where your country is, your risk is different, right? How much are you ready to move on to the next stage? Oh my God. Anyway, so that's political risk. Uncertainty is also always there, right? Different countries, different risk is there. Sovereign governments have the right to regulate the movement of goods, capital, and people across their borders. These laws sometimes change in unexpected ways. Yeah, unexpected ways. Be our guest, I told you. Right. Market imperfection is another one, right? Imperfection. Okay. Market imperfections, legal restrictions on the movement of goods, people, and money. Okay, different transaction costs, right? Different shipping costs and tax arbitrage, different tax regime, different tax rates, right? For example, cap gain tax when you do personal stock investment in the stock market. Korea, there's no cap gain tax. How could that be? That's Korea. Just to encourage our individual investors to jump into the stock market. Please, I need your money, we need your money, kind of things, right? Well, in contrast, in the US, there is a cap gain taxes. And there will be a tax break if you lose money in your the stock market investment. Different tax regime, okay, is there. And then transaction cost as well, right? The stock buying and selling, those brokerage fees, right? Korean stock brokerage fees has been very low in the first place, so there was not much of a difference between before versus after COVID-19. Or fintech involvement, our home trading system, by 키움증권 or other brokerage houses was very solid and strong enough. We were able to see, order balances over there, right? How many of the shares are weighted in the buy side and sell side, okay? But in the US, those systems and then the fees, trading fees, were very high before Robinhood, right? Robinhood or Robinhood, I don't know how to pronounce that. But the Robinhood said, right, no trading cost. Wow, okay. That triggered a lot of, individual investors to jump into the market, right? That's a different transaction cost. And then different countries, right? In the country level, the fee structure is different, okay? And the legal restrictions, is there, right? Goods and people and money, all these kind of things. You talk about this, trade war between China and the US. You see that. One of the things, the examples about market imperfection is Nestle. Right? Chapter 17 covers it more in depth, so wait for that. But here, the idea is, the restriction against foreigners, right? You see Korean newspaper, they always talk about foreign investors. As if they are always invading Korean companies and take away all the good resources away from Korea. But if you believe that Korea is the only country having this kind of mindset, like more nationalistic and protective mindset, come on. We are not alone. You are not alone. Every country has their own nationalism going on. One of the things is Nestle, Nescafe. What else, right? Swiss company, but supposedly this is one of the most globalized corporations in the world, right? The multinationals. They operate in hundreds of different countries, right? And then taking over a lot of different companies here and there. But the controls, right? The control, shareholding structure, they wanted to be, they wanted to keep it within Swiss domestic nationals. And then to the foreigners, they wanted to restrict it, okay, somehow. So let's see. Nestle used to issue two different classes of common stock, right? This kind of things must be familiar to you when it comes to Coupang's IPO, okay? The two different classes of shares, right? Which is not very common not allowed in Korea, okay? But commonly used in US and then other countries. Two different classes of shares, bearer shares here, and then registered shares. And then foreigners were only allowed to buy bearer shares. And Swiss citizens could buy registered shares. You can guess that, registered shares is for Swiss nationals, and then concentrated ownership must be there for them. Foreigners, you can buy and sell, but it's not that much of a voting right, I guess, right? But the thing is, the foreigners, the shares, the percentage allowed to foreigners, or the number of shares allowed to foreigners is very restricted, whereas the demand for the shares coming from foreigners were huge because it's a global company. Everybody knows Nestle, everybody knows Gerber, and then you name it, right? So people want to buy it. High demand, excessive demand in foreign stock market, whereas Swiss domestic nationals, how many people do they have, right? The bearer stock was more expensive. Foreigners, right, had to buy the stock 2 times the price, right, more expensively. But then again, in 1988, the company lifted the restrictions imposed on foreigners, right? They said like, yeah, from now on, let's just make it common, right? Between foreigners as domestic nationals, let's let them have, the same, okay, things there, allowing them to hold registered shares as well as bearer shares. No difference between these two. So after 1988, the two prices, okay, of the prices of these two shares, right, will converge, right? But before that, it was this much different, okay? With this announcement, the price converged to each other. That was a drastic movement, famously studied and then published in Journal of Financial Economics in 1995. And then this is a good example about those imperfections, market imperfections in the demand curve, right? Demand curve of the share doesn't seem like flat, but it's kind of downward sloping. More demand, higher price. That's the thing that you're going to see it over here. Now, example of Nestle market imperfection concluded. Following this, the price spread between the two types of shares narrowed dramatically. This implies that there was a major transfer of wealth from foreign shareholders to Swiss shareholders. Foreigners holding Nestle bearer shares were exposed to political risk in a country that is widely viewed as a haven from such risk. The Nestle episode illustrates both the importance of considering market imperfections and the perils of political risk. Now, what's special about international finance? The third thing is expanded opportunity set. Well, it doesn't make sense to play in one corner of the sandbox. The firms can gain from greater economies of scale, and then when their tangible and intangible assets are deployed on a global basis. So the better economies of scale and scopes can happen as you widen your business field, right? Internationally, expand it. And then true for corporations as well as for individual investors, yeah. Goals for international financial management. The focus of the text is to equip the reader with the intellectual toolbox of an effective global manager. But what goals should this effective global manager be working towards, right? Maximization of shareholder wealth, is that a goal of our work, or is there any other goals, right? So it gets back to the goal of corporations. Is it why does the CEO work, right? Who does the CEO work for? Is it about maximizing shareholder wealth or stakeholder value maximization? Jack Welch, right? The late Jack Welch, the CEO, ex-CEO of General Electric, is here, and then he was a big pusher for this concept of shareholder value maximization. It's long accepted as a goal in the Anglo-Saxon countries, but complications arise. Who are and when are the shareholders? Where are the shareholders? Matters, right? Which country, right? Swiss versus Korea versus America. Japan versus Korea, Nexon, right? Or Line, or Naver. Naver founder is my high school alumni, by the way. But is it a Korean company or Japanese company? Which shareholder would you like to listen to, right? If there is some conflict between these two countries, where would you go? In what currency should we maximize their wealth, right? All these kind of things, you'll have to worry about it. Other goals of stakeholder value maximization is also there. Remember over here, shareholder value maximization sounded very simple, but that's simple only when it is domestic company. If it is internationally diversifiedly, shareholders base you have, then things get more complicated. Even if it is more shareholder value maximization, and getting away from that shareholder value maximization concept, stakeholder value maximization concepts gets in there. By the way, shareholder value maximization. Why do we care about this? This was based on, okay, the assumption that the capital market is efficient, right? And shareholder value maximization, the concern was short-termistic behavior, okay? Maximizing shareholder value right now, okay, immediately, right now, to satisfy the demand of these analysts and the fund managers in the short run. Sounds good. But what if, your project is more of a, socially good that is difficult to be priced immediately? CSR kind of things, okay? Has not been priced that much faster, okay? And then long-term R&Ds and then innovative breakthroughs, right? Those investments, you may skip it. You may ruin that for the purpose of short-term value maximization. That is the biggest concern, right? In this shareholder value maximization argument. But there was an assumption that the market is efficient. They would be priced right away, no matter how long that project must be. Okay? If you are a strong believer of market efficiency, you will go for shareholder value maximization, right? You will say market is so efficient that it's not going to be short-term oriented at all. Your long-term project will be priced immediately right now, so that you don't have to worry about short-termism versus long-termism. Okay? The long-term value is already priced over there with the belief of efficient market hypothesis. The problem is what? It takes time. It takes time. Yeah. So that's why shareholder value maximization argument was facing that much problem. Anyway, other goals, stakeholder value maximization. In other countries, shareholders are viewed as merely one among many stakeholders, right? 이해관계자들 of the firm, including employees, suppliers, customers, right? In Japan, managers have typically sought to maximize the value of the keiretsu or 계열사, right? Supply chain, the companies in your supply chain, I would say. The 계열사 in Korean concept is the same Chinese character, but the meaning a bit different. 계열사 in Korean terminology is like family clan based. Oh, you are our family group, Samsung group or LG group. But the keiretsu over there is like who is supporting me, like Apple and then Foxconn, keiretsu, right? Kind of things. The supplier relations, taking care of all these kind of groups, stakeholders together. Okay, that's the concept over here. A family of firms to which the individual firms belongs, 재벌 or zaibatsu. Yeah, the word zaibatsu was more popular in 1990s, 아재 terminology. And then 재벌 is much more popularly used these days in 2000s and 21st century keyword. 재벌. Internationally, it's more used. It's not because I'm Korean, right? But because if you Google search it, right, it is the case. The zaibatsu word go down. 재벌 word is much more popular these days. Why is that the case? Because maybe, there's the academia world, they're using it naturally. I don't know. Interesting phenomena. Other goals. Principal agent conflict, right? Principal agent conflict is there. As shown by a series of recent corporate scandals at companies like Enron, WorldCom, and Global Crossing. Even though it says recent, but it's history, I guess, to you. Okay? Enron went down when you were born, I guess. 2000s, right? Dot-com bubble right afterwards, 2000, 2001, there was a debacle, fraudulent accounting. Supposedly energy trading company, Enron, the Fortune 500 top 3 or 4 biggest sized energy trading company was a fake. Total fake. And nobody's doing that, right? Nobody was really trading or anything doing, right? But people believed that and bought and sold. All those, Global Crossing, WorldCom, you name it. And then managers may pursue their own private interest at the expense of shareholders when they are not closely monitored, right? Not monitored, you're going to screw up, all your work that you're supposed to do. You never know what the CEO is going to do at the corner office when he or she closes that door, right? Behind the closed door, what will they do? These calamities have painfully reinforced the importance of corporate governance, monitoring, right, and advising them, and the financial and legal framework for regulating the relationship between the firm's management and its shareholders has been a big issue. Corporate governance, right? Business culture is another thing that we have to consider. These types of issues can be much more serious in many other parts of the world, especially emerging and transnational economies such as Indonesia, Korea, Russia, where legal protection of shareholder is very weak or virtually non-existent. That's a source of Korea discount, right? No matter what the other goals, these cannot be achieved in the long term if the maximization of the shareholder wealth is not given due consideration. So, shareholder rights protection is very important, but it varies a lot across different countries. Korea discount, talking about it. Previously, we thought Korea discount has 2 factors. One, maybe North Korea, and the other, maybe this governance issue. And then as time goes by, we realize that North Korea is not a factor these days, right? I told you before, right? They have been doing crazy stuff over the 70 years. No surprise. And they're not going to kill us. They're not going to kill the goose that lays golden egg. And that goose supposed to be us. They're not going to kill us, right? That tells us that the Korea discount majorly comes from what? Shareholder rights protection, right? Basically, those individual shareholders, right? Small camis, right? They are screwed and sucked up by big shareholders, not the 기관 thing, not the institutional investors, but I'm talking about those founding family members of the 재벌s or big corporations or those guys, right? Your shareholder right is not protected well. That's a series of there's a series of evidence on that. So that's why we have more discount in Korea. Some extra history notes and globalization waves. I'm going to talk about it in the next video. Thank you.